Hello everyone and welcome back to Markets Analysis. Today let's talk about the Indian paint industry. People who are holding or consider to buy paint stocks, or if you're doing research in the paint industry, this could be a helpful video. So paint industry, which is a vibrant sector, is now facing a new challenge. The depreciating rupee is squeezing their profit margins, and along with the depreciating rupee, there is intensifying competition as well. So let's delve into how this currency shift weakening rupee is impacting the industry and what it means for businesses. Dominated by key players, the Indian paint industry has Asian Paints leading with approximately 59% market share, followed by Berger Paints at 18%, Kansai Nerolac at 15%, and the rest hold the remainder. This industry is dominated by a small number of companies. You can basically count them on your fingers. The top three, Asian Paints, Berger Paints, and Kansai Nerolac, combined these three companies have 91% market share within them. But this structure, this huge domination by a small number of players, has recently been disrupted by new entrants, leading to increased capacities and heightened advertising expenditures. The rupee depreciation, with projections suggesting it could touch 87 against the US dollar in months. If rupee value is becoming higher versus US dollar, means it's called rupee getting weaker. The weakness in rupee has led to increased cost for importing essential raw materials like crude oil derivatives, which are used to produce paint. Paint companies import a lot of raw materials like crude oil derivative. When the rupee weakens, importing becomes costlier. This surge in input cost has pressured companies to implement price hikes of 1.5 to 2.5% to maintain their gross margins at previous levels. Along with rupee weakness, the entry of new players has intensified competition, prompting existing companies to expand capacities, increase advertising spending. Over 1 billion liters of additional capacity are expected to be added in FY25 to FY20, predominantly from new entrants. This competitive landscape has led to a projected decline in operating margins to around 14% in FY26 compared to the average of 18% of the past 5 years. For consumers, these industry challenges translate into higher price for paint products. The decorative paint segment, accounting for 70 to 75% of total demand, continues to be the primary growth driver, fueled by repainting activities to existing homes or buildings. Along with that, rapid growth of urbanization and rising disposable incomes are also some of the positive trends in the paint industry. Despite these challenges and positives, the Indian paint industry is projected to grow at 8 to 10%, reaching an estimated value of 2,640 billion by FY33. However, the combination of a depreciating rupee and intensified competition is expected to result in lower operating margins for the company. It is expected to reach around 14% in FY26 compared to the average of 18% over the past 5 years. The depreciating rupee presents significant challenges for India's paint industry, affecting both companies and consumers. As the market evolves with new entrants and shifting economic conditions, the resilience and adaptability of these companies will determine the future success. No one has really knows how this will take shape in the future, but one thing is certain, it's the growing competition in the paint industry. So what are your thoughts on the industry's prospects? Share your views in the comments below. I will come back again with another interesting video. Until then, have a great time. Don't forget to like the video if you found the content informative.